Let's focus in on the banking sector, specifically UBA, which has been in the news this week after issuing a profit warning. It's forecasting a loss for the full year. What are your thoughts on the bank, specifically in the light of the fact that it's now had to delay its capital raising plans?
Hello, Samantha. Thanks for having me. I would say the profit warning wasn't necessarily a surprise for us because we did expect that UBA would take some huge losses in 2011 because I think primarily because of its Xenon loan. It had about 36 billion exposure to Xenon, and our view was that the quality of the collateral wasn't that good, and so we expected that there would be a significant provision from that particular portfolio. But I think what we found surprising was the loss the bank highlighted that they would make from trading. And even though we still don't have exact details or the quantity of the loss yet, but we felt that had to be quite significant to result into a loss, because also the bank had a conference call yesterday with investors and analysts, and they also highlighted that about 100 billion worth of loans was transferred to AMCON in 2011. We felt that was quite high as well, and also confirms our view that asset quality was a issue for UBA, because we had published a report in November last year highlighting that we still found we're quite concerned about UBA's asset quality, and I think it was really driven not necessarily by its slightly higher NPL ratio, but more from its low net interest margins, because as at Q3 last year, net interest margins stood at 5.5%, while for the sector it was for its coverage average, for its peers, it was about 7.2%, and so we felt that was very unusual given high interest rates and its strong loan growth as well. So I think that's where we saw the disconnect. And I think if you go to the capital raising that was suspended, for us, we weren't surprised that would happen as well, because we felt market conditions wouldn't really support their capital raising ambition at that time, and the price they also wanted to raise on we felt was quite unrealistic given the market price and also their and so we felt that the timing was wrong.
Yeah, we've seen how the shares have been punished. We know that the bank plans to expand its Africa operations now. They currently contribute around 17% to earnings. They're targeting up to 25% to earnings in 2012. Do you think that it's right for management to be going so aggressively into Africa when Nigerian operations aren't doing that well?
I think it's a point we've highlighted. We did feel that the African expansion was a distraction, and also we felt that was what really that contributed to its poor performance in Nigeria. But I would say so far it appears as if the African expansion has been, operating performance has been improving. The bank expects that about 14 of its branches in Africa will start making profits in 2012, and so we think that that's an improvement from where they were in 2010 and also in 2011. So I would say, looking at Africa, it appears as if Africa is improving, but we think Nigeria is still a challenge. And so I think what's important for UBA right now is to focus on how to improve operating performance in Nigeria, tries to improve efficiency and really start benefiting from its large balance sheet size, because given UBA's current balance sheet size, we think it really doesn't it's in a very good position to operate at a premium level right now, but it hasn't been able to do that. And so I think that's why we haven't really liked UBA as a stock at this point in time. And so even though looking at our coverage, we still favor the tier 1 banks, but we feel UBA has underperformed significantly. And
we've definitely seen that in the share price.
Until we see an improvement, we will. Until we see an improvement in operating performance, we won't see a reflection in the share price at this point.
That's what most analysts are saying right now. Muyiwa, thank you very much for your time. Muyiwa Oni, analyst from Stanbic IBTC Bank.